It's about that time of day again here, folks. Welcome to Nightly Newsletter, boys and girls. My name is Joseph James. Yeah, it's already Monday. A weekend flies by, always too short. It's Monday evening, though, March 30th, 2015. We're finishing up the first quarter, finishing up the month of March, almost out of the month of March here, one of the hardest months of the year. I'll tell you more about that in a little bit. In tonight's newsletter, crude oil is bearish, trading inside a megaphone. That's right. We haven't seen a megaphone on crude in a few months. Exciting stuff. This gets our attention because we know that megaphones mean lots of great volatility. We're expecting the next few days here goes right along with the end of the first quarter. So expecting a lot of good volatility on crude oil. We will be focused at following the trend, selling at resistance levels overhead, and we've got a lot of great support levels below to use as targets. So stay tuned here for some charts on crude and a strategy for tomorrow. How about gold? The yellow metal is bearish after rolling over to the 615 contract. Heads up on rollover on gold. We'll show you more about that in a second. We rolled over on gold, and now we have lower lows, lower highs. We're staying patient to sell retracements at resistance levels on gold right now. Don't forget, join the trade room on Tuesday for the accurate targets after we get the retracements. So we're going to give you some retracement levels on gold, and then come out and see me tomorrow in the trade room, and we'll walk you right through where those targets will be once we get those retracements. As you can see, we have a great newsletter in store for you this evening. But before we begin, please be aware, I teach all of my students every day how to create these charts, as well as how to trade each level of support and resistance properly in our advanced course here at School of Trade. And before we jump into our charts, I want to remind you to watch this video on our trading blog. There are 3 reasons why you should be watching this newsletter video right now on our blog here at Sideways Markets. That's right. If you're watching the video right now on our YouTube page, there is a link right below in the description of the video that will take you right to this page. There are 3 important reasons to watch this video on our trading blog. The first reason, you can download all my charts today. Every chart I'm going to use tonight in the video, you can download those charts and have them ready on your computer to use on your time whenever you need them. Click that link right below the video. Second thing, upper left-hand corner, I have a free pass for you to come out and attend our live trade room. If you're not a member of School of Trade and you're curious, how do we use these levels every day? What does it feel like to be in our trade room? What does it mean to be a member of School of Trade? Come out and join us. We get a great free trial, and I get a free pass for you to come out and attend our live trade room as part of that free trial. And of course, the third thing here, last but not least, right above my ugly mug, you'll see a spot for your name and your email address. All I need is a little bit of information from you, and you can register for our nightly newsletter mailing list. That way you never have to worry about missing another newsletter ever again. I'll send you an email right around 8 p.m. Eastern Time, Monday through Thursday evening. We don't do them on Fridays. And that way you never have to worry about when that newsletter is coming out. All right? 3 things here, guys. Download the charts for today below the video. Grab your free pass. If you're not a member of School of Trade, you want a free pass to our trade room. And of course, the third thing, yep, there were 3, register for the nightly newsletter mailing list. All right, sounds like a pretty good deal. Let's get started, though. We don't have time. Time is money here. We're wrapping up the month of March. We're wrapping up the first quarter. And again, as I said earlier, remember, this is some of the hardest trading you're going to get all year. And it has everything to do with the fact that the hedge fund industry is usually being affected by the redemption period at the end of the first quarter, right? A lot of balancing acts going on in the asset management world at the end of the first quarter, right? If you're an asset manager and you're trading other people's money, if you don't have a good number next to their account at the end of this week, well, you're probably going to be getting a request for redemption as well, which means you're going to have to give the money back to the client, rebalance your portfolio, which is a very, very important task for a hedge fund manager. That's what causes all this volatility this time of the year. Not to worry, though. We're almost out of the woods, and we've made some great income, even in the face of this challenging environment we see this time of the year. Apparently, we forgot about Saudi Arabia and the airstrikes. I haven't heard about that in about 48 hours. How funny that the news that gets crude moving these days just quickly passes by now, right? We talked about this before. OPEC is almost a non-issue anymore. And boy, we used to have to deal with about a week and a half of volatility after violence in the Middle East. They seem to shrug that off. I didn't hear about that at all today. Very interesting the way this world, the paradigm has shifted regarding energy around around the world right now. Very, very interesting stuff. All right, we'll keep talking about that more tomorrow in our live trade room. Time is money. Let's not waste it. Let's start out with that yellow metal we call gold futures this evening. I got all the information listed in the lower left-hand corner here. Gold price action is bearish, but we have some big clues telling us to expect prices to move higher before they return to this bearish trend. First of all, we see an overshoot of the channel, right? Kind of an ugly bear channel here, but, we connect the dots. Everything lines up pretty well. Overshoot. Now, what happens to the overshoot? Well, remember what the markets are. The markets are nothing more than a group of people, and us people, usually the highs match the lows, right? We overdo it, and then we underdo it. So the overshoot will probably result in an overshoot to the opposite side. Maybe 1200, wink, wink, nod, nod, just a little bit of a clue there. First clue of why prices will most likely go higher here tomorrow before we continue with our long-term trend is that overshoot of the bear channel lows. Second thing here, we got kind of a double whammy here at this 1185 area. Notice, connect the dots, A to B, C to D. Again, a little bit ugly on the way down here as the end of the month comes to a close, but we know that is a range expansion and a measured move target. There's your measured move, and then of course flattening moving averages, double tops, double bottoms. There's your trading range, conveniently right around 1200. Shocker. And of course, you take out that range expansion, multiply it by 2, and you've got the 1185 area. So this is definitely a key level of support, and you can see some poor soul actually sold that low. Wow. So we called it a fake break of the low. Price should naturally go higher here. So if you're a buyer right now, you've got limited time on this, but if you're a buyer, you're probably going to be able to get some little scalp opportunities here on our way back to at least to that channel high, and possibly up to that 1200 big round number. Tough to say exactly how far it will go, but if I had to guess right now, assuming nothing comes out overnight that kind of shakes this thing up, that's always my most difficult job, or the challenging part of my job in this newsletter, is that I have to give you guys a good 18-hour heads up here. A lot can happen overnight. So assuming nothing drastic happens overnight, we should see an overcorrect at the highs here. So that puts us, and again, 1200 looks to be like a pretty tasty little price magnet. All right, so buyers look for short-term buying opportunities back to 1200. If you're a seller right now, though, you better take some profit here. If you're still short on the call we made last week, definitely be taking your money out of this market right now, if not all the position. But if you're going to leave anything on, make it a very small portion, because this is most likely going to go back higher here. And then we'll be looking for this area tomorrow. Take another nibble to the downside, right? If we even get up there tomorrow, right? We may kind of meander our way up here tomorrow. So we'll come back and take a look at that in real time tomorrow morning in our trade room here on gold. And then, of course, the gold anchor chart gives us a lot more of the same stuff right now. One of the big clues we see on the gold anchor chart is this area right here at that 1194.5. So again, if you're a buyer, we have the BMT coming right over top here, and I would imagine now that's going to be your target. I would imagine that's going to be a pretty good solid target there. That lines up really nicely with that 1195 area, right? It's not exact. It'll never be exact, but a little area of confluence there for all you buyers. So 1195 to 1200, that would definitely be where I'd be looking for my targets if I'm a buyer here on gold right now. Again, if you're a seller though right now, we're down at the lows of this bear channel. This channel looks a lot different, right? These are JJ bars. These are range-based charts. So you can see you don't get that overshoot like you saw off the tick charts. So we know that we're looking to go higher here. Again, if you're a seller right now, stay patient. And then once you get up into this area here, we'll be watching to see how the market reacts to those areas of resistance. Remember, professional traders, we anticipate all day long, but we always look for proof. So look for the reversal patterns here at these red boxes, followed by wave patterns as we start migrating our way down to range and extension support. We've got extension support 78.4, and then just sneaking into the bottom there, you got range support If you go over to the left here, right, you'll notice there's your range support right there at 1159.1. I'll tell you, I don't think we're going to get all the way down to that 59.1 this week. I'd be lying to say if I said I knew we weren't, right? I mean, this is gold we're talking about. It can definitely be a mover. The only thing is, though, this is the end of the quarter, right? And so I just don't think you're going to be seeing a lot of people taking large positions that would make this market move that way. The only hope we have for a big run up or down would be the low volume environment we're going to be in the next 48 to 72 hours. At the end of the month, at the end of the quarter, smart traders take a step back and we really trade carefully this time of the year. Remember what I talked about that last week, right? End of the quarter, end of the month, self-fulfilling prophecy says we're going to get a little bit lower volume. So just stay patient, right? Be thankful we made all this money so far, this quarter so far, right? So stay patient. Stick to, again, short-term buying opportunities, long-term selling opportunities, and just follow your plan. And if you don't have a plan, what are you waiting for? Come out and see me in the trade room tomorrow. I'll give you a great plan to trade any market you want. All of my stuff works on any liquid market because everything we do here at School of Trade looks to profit on crowd psychology, right? So as long as there are human beings involved, even if those human beings are programming those high-frequency trading computers, we still know that crowd mentality will show right through. Boy, look at this chart here on crude. We move from the yellow, right, the yellow metal, the gold, to the black gold, the Texas T. Here's our crude oil futures. We start out with the JJ chart, the 16 anchor chart here. This will be our slower of the two time frames. And yeah, you can see it right smack dab in the middle. That is probably should get some horns going. That is the megaphone pattern that, boy, we saw a bunch of these in the month of January. Didn't see too much in February or March, but boy, oh boy, this is a very obvious megaphone. And again, it really gets my pulse kind of going faster because we know this is going to result. Most of the time it will result, almost a guarantee, we're going to get some pretty good volatility from it. So definitely over the next few days, expect to see a little bit more volatility. Now remember, increased volatility, one of the key things you want to be aware of is when volatility goes up, our trade management needs to widen out, right? So play it safe, use a smaller position size with a slightly wider stop, but also wider targets. Just remember, though, to use that smaller position size, though, when you have to widen out your targets. We do a lot of training here at School of Trade talking to our students about how to use the average true range, the ATR, the range of the market that you're trading. Every market has one thing in common. It's a group of people. But those groups of people have a distinct personality. Gold's a little bit different than crude oil. So you got to have that relationship with the market you're trading. I'll help you speed up the process as a student here at School of Trade. But what I want you to remember, though, is we see this megaphone. The megaphone tells me right off the bat, expect some volatility. When I get a clue like this, it tells me tomorrow or tonight, whenever you go to trade, I would recommend be open-minded to a wider stop. And with that wider stop comes more risk on that trade, but you can offset that risk by trading a smaller position size, okay? If what I just said to you just went right over your head, that should be a clue right there that you need you need to be professionally trained in this stuff, guys, before you go risking your real money in these volatile markets, all right? I look forward to seeing you in our trade room tomorrow, and I'll talk all about how increased volatility can easily be managed by smaller position sizes. Moving forward, we definitely can see the megaphone. What else do we see here right now, though? Well, again, right in the lower left-hand corner, crude oil is clearly bearish, lower lows, lower highs. We're trading inside of a megaphone, which gets us excited, as we talked about before. So we're going to focus on selling at resistance levels above to follow this bearish trend, and then we're going to use support levels below as our targets. So as we go higher, we're looking at resistance levels overhead, and look at these areas right here. Look at this area right up here, 49.63 to 50, up to 50.05 to 50.62. There is a ton of confluence in there. Okay, on top of it comes the big round number of 50. Remember, there are some significant kind of price levels that we watch. 100, 75, 50, things like that, right? 80, 90, 70s, right? The big round numbers out there, there can be price magnets. They're psychological levels. So we know that's one of them, right? There's a bunch of levels lining up here. The $50 round number, that's one of them. Reversal line, that's another one of them. Trading range is right there as well. We have multiple sell zones lined up on top of each other. And let's just throw another level on there. We have the top of the megaphone, right? Could there be anything more waiting for us right there smack on top of 50? That leads me to believe we may see price go straight at 50 here in the next 24 to 48 hours. Difficult to tell. Buyers, be very, very careful, though, taking that always look for proof, right? We're not going to guess right now. If you're a smart trader, though, right now, I think smart traders, you might get some short-term buying opportunities. But remember, this megaphone, the path of least resistance, the most profit for the least amount of risk is going to be selling that high, waiting for price to go up, and then wait for those buyers to try. When they fail, sell it right back down in. That's why I said our strategy right now is going to focus on following the trend. That's what conservative professionals will be doing right now. The trend is clearly down. So even though we think price will go back up here, possibly all the way to 50 before coming back down, there is absolutely no way we can tell that. Okay? Look for proof. Anticipate, but always get proof. So we will stay focused using the highs and the lows of the megaphone as our biggest clues. And then again, looking to sell, sell, sell at these highs and take our profit, possibly a little bit of foreshadowing there down to 46.19 later on this week. Most important thing I want you to know about crude oil. Expect volatility the next 24 to 48 hours. Stay focused on the sell side. And when you get up to those resistance areas overhead, don't just guess. Wait for proof. Wait for the buyers to try, and when they fail, you can sell at the range highs. Wait for the buyers to try, and you can sell at those range highs, right? Look for proof. Look for proof. And if you need help finding that proof, you know where to reach me tomorrow. You got the plan there for crude, and then here's another really good chart I want to show you guys tonight that really, I think, really tells us price is probably going to try to make a run for this 49.5 area, possibly all the way up to that 50 area. We get a trading range up there. Take a look at this chart here, and you can see this is a price action chart, right? Not a lot on this chart, just a bunch of candlesticks and one simple indicator on it. We use the candlesticks to tell us exactly what's going on, and it's our knowledge of the crowd psychology that allows us to use this such a naked chart to be able to make money with it. So crude oil price action, trading in a range after 2 days of selling opportunities. We talked about that last week in our newsletter for last Thursday. So we're going to use this range to determine our levels of resistance overhead, right? So here's our trading range. That gives me levels of resistance overhead, and it gives me areas of support below. What that means is I can go up, sell, target, 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 target on the way down. This trading range gives me a whole lot of information that I can use possibly 2 to 3 days into the future. These trading ranges are very, very important. If I was a volume profile type of guy, you would be seeing a lot of volume piling up here. This is why I always laugh when people ask me, why don't I trade market profile? Why aren't you using order flow? Because you don't need to. You don't need to. It's a crutch. It's a distraction. I don't need some volume indicator on the right-hand side or the left-hand side to tell me where the most amount of volume was. Look where the flat moving average is. Look where the overlapping candles are. Look where the trading range is. That's where the most amount of volume came. It's very easy. You don't need indicators to tell you this. You need knowledge, or as I always say, common sense, right? But it's amazing these days. In the invention of the internet, common sense is not as common anymore. What we do at School of Trade is we teach people to get off the bandwagon of the indicators because they're a big distraction, they're a big crutch. We focus on actually the knowledge of how these markets work, so you don't need to rely on some lagging indicator to tell you what to do, right? Every time I rely on an indicator, I'm missing what's being told to me right in front of my cabeza. Anyways, let's keep going. So we know we have the trading range. That gives me resistance overhead. It gives me support, right? Support below. So aggressive buyers, here's what I'm seeing. I'm seeing a little fake break of these lows. Okay, here was our low, right? We got a little bit of a try to go lower here. Usually when we try to break out of a range, the first time it's going to fail, and it will go in the opposite direction. Now, we're not out of the woods yet to come back down, but that's the first clue that we get here, that fake break of the low, the fake out breakout. That's what FOBO stands for. The fake out breakout of the lows tells us we're going to snap back in the opposite direction. If we go higher here, we know where we're heading. We're heading back to that range expansion resistance, 49.33. And if we get to 49.33, it's difficult to say we're not going to go right to that 50 area, which again, we just talked about as a definite area of confluence. You can see this trading range, lot of interest here. Again, I don't need volume to tell me that. Double tops, double bottoms, there clearly was interest in that area between the 50.19 and 49.62. So if I had to guess right now, I would say we go up to that range expansion. I'll be looking for the buyers to try and fail and sell it back down. Again, I'm still looking at this bearish trend. I have a resistance trend line overhead. We'll definitely use that. But even though I want to look for selling opportunities at resistance, I need to wait for proof. So if it just slices right through it, I'm not going to be doing anything. I'm going to wait to see the buyers try and fail, right? Remember, how do you get short when price is rising? Either a reversal pattern, a failed buying pattern, or you wait for the price to make the turn and then you trade continuation patterns back down. There are three very easy ways to get short when price is rising in the short term. What is it again? A reversal pattern, a failed buying pattern. That's my favorite, by the way. And then, of course, you got the third one, which is just to be patient. Just wait. Don't force it. Just wait for price now to come tumbling back down and then hop on with some wave patterns, right? Find some triangles, find some pullback, retracement patterns, and just continue to trend back down. As we go back lower, we're going to use that same level of support or that was resistance, right? So as we come back lower, target, 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 and target. Now, once again, guys, don't forget, what I'm telling you today are the price levels and the trend that we're going to be using for tomorrow. Come out and see me in the trade room. I'll walk you right through how we're going to use all this stuff. Finding proof and finding the appropriate pattern. And like I said, we're expecting some pretty good volatility here on crude oil because of that megaphone we saw before. All right, guys? Buyers, you got some short-term buying opportunities most likely here, but sellers, stay patient up at those range expansion resistance levels, 49.33, 50.19. Be ready at those areas for the best saleable or sellable opportunities. All right, guys? Boy, oh boy, time flies when you're having fun. Already through the month of March. I'll tell you, I won't complain at all when this month is over. It's one of the more challenging months of the year, as I've discussed with you already, guys. I want to remind you here, download today's charts. Right below the video, grab your free pass, register for your nightly newsletter mailing list, and if you happen to stumble over here to schooloftrade.com, don't forget, we have the best free trial in the business, guys. Head over to School of Trade, check out the free trial. Part of that free trial, I'll invite you out to come attend our trade room in the afternoon. Always, always a great investment in your time. You're going to learn more for the discounted price of free $99. You're going to learn more with me in 1 week in my free trial than you will anywhere else on the webs. I'll tell you that much right now, and I'll prove it to you. We have 3 levels of membership, beginner, intermediate, and advanced, and we always have someone standing by 24/7, 365 to answer your questions. Guys, my name is Joseph James. We're just getting started this week. You want to do it again tomorrow? Yeah, let's do it again tomorrow. Same time, same place. Now get out of here. Go have some fun tonight. We'll see you guys tomorrow morning. Be well. Be nice to each other, and make sure you guys are with me tomorrow at 8 a.m. Eastern Time when we open up a live trade room. I'm out of here. Adios, amigos. Bye-bye for now.